Yo, what up everyone? In this video, I want to talk about some key points, which I bet a lot of you do, including myself sometimes, honestly, and it's the reason why we take losses that could have been avoided in the first place. I'm going to review a trade that I took today. It was a really good trade with its analysis, why I took it, along with some market context and some lessons to learn off of based on the current market structure. There's a lot of lessons with what we've been seeing recently. And I'm sure a lot of traders watching this, they're going to know exactly what I'm talking about and they're going to relate to it very well. And I'm confident that it's going to help you all stop making this mistake and stop taking losses in this manner. All I ask is if I add any value to your trading, I would appreciate it if you could leave a thumbs up on this video. And if you haven't already followed me on Instagram at Entretrade, I'm going to link it in the description below. I definitely recommend following it. I post daily trading recaps on here, along with very good trading tips and tricks that I guarantee you're not going to find anywhere else. Link in the description below. Definitely follow that. But now let's get right into this lesson. To get context for this whole setup, we first have to go into the pre-market plan. I post these every single day in the Discord, the setups I'm watching, levels I'm looking out for, and potential scenarios I'm watching to play out. So this one was on the NASDAQ. You all know I trade the QQQ options off of this chart. So we had it at a very, very important area and a very important demand at 15731 and 15688. Now I was watching for a few potential scenarios. Again, no one knows what's going to happen in the market. So I recommend having your levels of interest, plot out your levels of interest. And what you have to do as an intraday trader is just react how the market reacts at those levels. No reason to predict, no reason to think you know what's going to happen next. Instead, react at those levels, read the context clues that the market gives you. My supply and demand imbalances give me my where, and price and volume give me my when and why. So we are watching this key demand zone. A few potential scenarios. Number one is what played out today. So we were watching for a bounce at the 15731-688 demand zone, and we were watching for buyers to have the strength to take us back above the 15830 area. I labeled that as a key level on the chart. We were also watching for a move back above 15930 key level, could bring us back into 16,000, which in my opinion was a little less likely to happen today. This is why I always recommend and suggest to remain objective at all times. I see a lot of traders take very big losses because they try to predict what's going to happen next in the market. They see the market gapping down and they think that we're going to drop another 100 points to the downside. Or yesterday, for example, on Thursday, December 16th, the market was gapping up after FOMC. Everyone thought that we were going to continue after this gap up to rally, not noticing we were coming into a very key supply zone, and the market had a very large sell-off where bulls, after breaking below many demand zones, for example, got slaughtered. So now the market overnight was slowly moving lower, making lower lows, lower highs, and everybody and their mother, I saw it on Twitter. I had a bunch of traders message me on Instagram, say, hey, what do you think of the SPY plan tomorrow? What do I think of the NQ plan tomorrow? I'm pretty bearish on this. Very large gap up overnight and large sell-off yesterday. And I say you have to follow what the market gives you. No one is going to know what could happen next. You cannot have a bias. Market does not care about your feelings. It doesn't care what you think is going to happen next. Your thoughts have no influence on the market. So to avoid taking large losses, remain objective. Do what the market gives you, which is essentially what I did today. I honestly didn't see any high quality setups prior to the market opened or prior to the bell. But as the market opened up and we got new development, I got more interested in the market and more interested in my plan because I saw some key convincing signs. It's not something we could plan out for. A lot of people try to plan out for something that they think is going to happen, and it just results in a loss. So the point I'm trying to make here before I get into this trade that I took is if you think something is going to happen next, that is a bad thought. The less thinking is more thinking. Instead, react and not predict. Okay, so now that we have my levels of interest, the market opened up. And yes, we were bearish. We were making lower lows. We were making lower highs. And I could draw out 5 demand zones yesterday that got completely destroyed on this rally or on this sell-off to the downside when we rejected supply. So yes, the market was bearish, but that doesn't give us a good reasoning to think that the market will continue to the downside, because we had very key demand zones that obviously were on the chart, but they were also in the pre-market plan. So in the first 15 minutes, the market did sell off, and everybody was hopping on the bear side thinking that we were going to come to the downside. Now at this point, we did have a very strong rally, and we did come up to the 15832 key level. Now, the reason why I did not play this bounce was because this was a little too early. And if I go to a 1-minute chart, I really didn't see any key convincing signs for me to get long, other than a potential lower day break and a bounce, and other than very strong green candles to the upside. So you could argue, you could have got long on this way up. And I know a bunch of members did take this long and absolutely destroyed it on this rally. Everybody trades differently, right? So I didn't get long on this rally. I wanted to get a little more confidence with the market, and really for bulls to prove to themselves that we have strength to bring us up, which is really why I wanted us to get above the 15832 key level after bouncing off of demand. So when I saw it act as resistance here and the market pulled back down, I wanted a pullback to hold and for us to go retest this 15832 key level. So then the market started selling off. And at this point, I'm in the intraday commentary tab saying, y'all have to understand the market conditions. The market's already playing games, and it's only been 30 minutes into the market open. SPY and ES, same thing as NQ. The context is the same. We're below this week's lows. We're slowly entering bearish territory, but I cannot get too bearish, and I cannot get too bullish just yet. We're still inside and above demand. So at this point, I'm also watching ES. And ES is coming into a very, very important key demand zone that we not only bounced at FOMC on Wednesday, but we also bounced earlier in the week on Tuesday. So today, the market was selling off, and this was a little weaker than the NASDAQ. And in the first half hour, yes, puts could have worked, and yes, you could have played it, but I'm a probabilities guy. I want to take setups that have the highest probability. And just because the market is coming down like this, yes, you can make money off it. Yes, there were members that sent me their trade reviews and they did capitalize on puts on this. But for me, this is not a high quality trade because we are still above my level of interest. And I don't have any convincing sign that sellers are stepping in. And I don't have any convincing signs that buyers are stepping in. This is a very key demand zone that I said I cannot get too bearish and I cannot get too bullish above. That's just how I have to be. So I said shorts are working and they're good for scalping. The market has a possibility of turning at any minute, which makes it unfavorable inside of this demand zone for a large move, both to the upside and both to the downside. Now, at this point, I'm watching NQ. So keep in mind, I have multiple monitors and I'm always monitoring both markets and other equities to really develop a solid contextual trade with a solid high quality setup. Now, at this point, the Qs start selling off into demand. And honestly, I had a feeling, this is not an actual trade I put on, but I had a feeling that the market with this reaction off that key level was going to continue to sell off to the downside. Now, when I have a feeling like that, I don't blindly enter a trade like others do. I used to. I learned from my losses, which is why I don't do it again. You have to understand, in this market, you learn from pain. You learn from taking losses and never wanting to feel that pain again, so you do everything to avoid it. The old me would have shorted probably this lower day break, not knowing we were inside of demand if I didn't use demand or supply zones, and I would have probably got destroyed because this is a perfect trap for retail to get short. We broke below pre-market lows, we broke below the lower day, inside of a demand zone, very nice green buying volume bar right here, and yes, some people did get long. But from the context I mentioned earlier, with such weakness, and especially with this failed rally, I was not comfortable getting long down here, although it was a lower risk setup. I still stuck to my guns from the pre-market plan, and I said I wanted the buyers to show strength to take us back above the 15830 area. If they could do that, a move back into 15930 is definitely possible. So when I saw this, saw the consolidation, I saw a very strong move up. I can't enter as soon as we break above this level like this. I need to see some type of structure, right? For me to buy, let's just say up here. This is actually where I bought, but let's just say I buy up here, right? Yes, this could have worked out, but where is my risk? So instead, I waited to play QQQ calls. I got long at 10:37 when the market looked like this, when we were coming up right to my level, anticipating a break of that level, stop loss below the VWAP. So tight risk. I was confident with buyers bringing up to this key level the second time, and my risk was in play. I had the strength from buyers. Yes, I should have got long at demand, and this could have been a bigger winner, but got my confirmation signal here, and now we're above this key level, and it's somewhat of a risk-free trade. Risk-free meaning I let some profits off the table inside of strength. I got long at $1.56, and I sold 50% of my position at $10.53 at $2.40 for a 90-cent gain right here at the highs. Very good exit. Now at this point, I'm anticipating a bigger move because if we use a multiple time frame analysis, we had a very strong bearish or bullish move on a 5-minute. I love to see this consolidation at the highs like this. This gave me extra confirmation, extra confidence, and extra satisfaction that this trade had a higher probability of working. If it was lower probability, I probably traded with less size, or I just wouldn't have taken the trade at all. So then we got this pullback. Again, remain objective. Don't trade what you think is going to happen. A lot of people see 2 red candles like this and they think the market's going to sell off. As long as you follow your plan and you don't think the market's going to sell off, instead you react, we're still making higher highs. We're still putting in higher lows. We still have a very strong buying context, some nice buying pressure down here. You should not freak out. At this point, the S&P 500 had a nice move above VWAP. I love to see this pattern right here and some nice continuation above that, making me a little more confident with this NQ trade, along with other equities bouncing off of demand and rallying. So I'm out 50% of my position there. And at 10:13, I got out another 25% of my position when it looked like this. A strong move right into our 15930 key level. Again, once we're above this key level, we got really nothing stopping us to get to that key level. So I got out more of my position there. And at this point, I'm in 15 or 10% of my position that if we did have a stronger move to the upside, I was going to be in this trade. Instead, when we started to move down, I got out the rest of my position for a nice about 100% gainer on this trade. Very simple analysis, very clean movement. The best trades that I take that I've noticed in my journal work out right away. They become risk-free in a matter of minutes, and I get a very fast and quick move without having to worry about the market and me being able to read the context. So I want you all to understand that you have to remain objective at all times. Our brain constantly feeds dialogue to us on a daily basis, and this dialogue is our subconscious thoughts, meaning our brain is trying to trick us in thinking something is going to happen instead of relying on the facts with what the market does in fact give us. So I recommend everybody, I say this to all the Investor Trade members, to not have a bias. Like I mentioned earlier, a lot of people saw this gap down and they saw in the first half hour that the S&P was selling off, and they thought they had to play the market short just because we were selling off, not objectifying that we were in a very key demand imbalance. In fact, this level was also in the pre-market plan that I said we are coming into a very key area of demand. It's currently being tested, and we must bounce at this demand. I cannot get too bearish for a large sell-off if we are above it. If we got below it and below 7.5, then yeah, I would be bearish. But I really could not get bearish above this demand zone. So in the first 30 minutes, including myself, I'm guilty of it as well. Your emotions are going to go through the roof because you see the market selling off. Yes, you could make money on it, but you're going to think that the market's going to keep selling off, and you're going to think you want to make money on it, and you're going to think you want to be an active participant, when in my opinion, this is the time that you have to remain objective and just develop clues of what the market's giving you, and then come up with a high quality trading setup whenever you get your confirmation signals and whenever the market reacts to your levels of interest. It's all about reacting to the market, or reacting how the market reacts at those levels. No one's going to know what happened next. Yes, sometimes it might look like I know what's going to happen next, but I have experience. I know what important levels are. I know what I'm looking at, and I have this relationship with price and volume that is developed through the screen time and knowing what I'm actually looking at. So read the context clues, understand this. You can avoid taking large losses by doing this. Please don't enter a trade what you think is going to happen. Don't enter a trade because you see other people entering a trade. You know, these contracts went from a low of 58 cents to a high of $3.17. That's a 450% range from low to high. Yes, I only got 100% on this trade, but this was a still very fast trade. We went straight up. Again, pullbacks, as long as you remain objective, follow your plan. This could have been a very nice setup of very simple analysis. I know a bunch of members also played ES. I fortunately was in the NASDAQ trade at this point, but nice setup on this. And then after the first 2 hours, it was kind of like a chop fest. There really wasn't anything given the conditions. Quad witching, FOMC this week, job report on Thursday. But this was a very important demand zone. And like I said, I couldn't get too bearish if we were above this level. Same thing. Market gapped up on Thursday after a very strong FOMC, bouncing off demand. Perfect setup on that. Failed to break above all-time highs. Everybody thought, I remember this on Thursday perfectly. Tons of DMs. I'm swinging SPY calls. I think we're going to rally another 100 points. Or before the market opened up, how do we play an all-time high breakout? You know, I'm holding these things from yesterday. We had so many demand zones in this area that got destroyed on this pullback down, right? Indicating very weak buying and strong selling. Very strong sell-off, same thing today. So I'm not going to keep repeating myself. I just want you to hear my repetitive thoughts and repetitive comments in real time when you actually are trading, so it helps you avoid taking stupid losses. Nothing worse than taking a stupid loss, especially going into the weekend. So if you learned anything from this video, just drop a like on it, comment if you have any questions, check out the links in the description below. I offer a very in-depth and educational course that will come with access to the Discord. I plan on adding a tape reading section before year end, and the prices will not be this low for much longer. Besides that, peace out.